No matter how many videos we watch, how many magazines we read, or how many articles we go through, we never learn how to pick quality stocks. We call a friend and ask them for stock tips and they provide us stock tips, but that stock hardly works for 3 months. After 3 months, that stock starts falling. So in today's video, we'll learn how to pick quality stock. What is up guys? My name is Shobhadro and I welcome you all to Debit Credit Nation. And today, as per my promise, we'll learn about how to pick quality stocks. Before picking a particular stock, we need to scan the market and filter it from a macro level to micro level. For example, when a girl tells her parents that, hey, I'm in love with a boy, then her parent will perform a top-down approach to analyze whether that boy is suitable for their daughter or not, because it's a matter of an entire lifetime. To determine whether that boy is suitable for their daughter or not, an Indian parent would first check whether their religious beliefs match or not, or next, whether they belong to the same community. If this point satisfies, then the parent would check whether that boy belongs to a respectable family, because that would attach a stamp of pedigree to that boy. Next, that parent would check what is the monthly income of that boy, whether he resides with his parent or he owns a house or he lives in a rented place, because that will make sure that their daughter will enjoy a quality standard of living. And finally, in India, they'll fix some auspicious date which is called Muhurat in India, and the wedding will happen. Sounds funny, right? But we need to follow the same approach while picking a stock. First, we need to analyze the economic condition. For example, there is a war going on between Russia and Ukraine as of now. The fuel price is all-time high, dollar value is very high, gold price is rising. So if you don't consider the economic condition within which you are playing, you cannot buy a stock. If the economic condition is very bad, for example, the GDP is going to fall back to back in 2 consecutive quarters in USA. So if the economic condition is very bad, that means the market will not grow. Your investment will not grow. The analysis of economic condition can be compared to the first point, that is the parent is checking whether that boy belongs to the same religion or same community or not. Now moving on. Next, after economic condition, what you need to check, we need to do a sectoral analysis, like which sector is best to invest on. Now basic elementary economics says that human wants are of 3 types: necessity, comfort and luxury. Now what is necessity? Necessity is food, cloth, shelter, that is roti, kapra, makan. And what is luxury? If we add to food, cloth, shelter, we can add education, healthcare, electricity, logistic and transport, banking and finance. These are comfort. Now if we invest in these industries which are parts of necessity or comfort, your investment will grow. Then we move to the monthly income of our future son-in-law. That means once a sector is identified, it is now time to look for a company within that sector. So always look for sector first, then go for company. You can find a rich dulha, but that boy can be a fraud or can be a hacker. Hence always start from the macro level to micro level, that is economic analysis, then sectoral or industrial analysis, and then company or stock analysis within that particular sector. Generally, share prices of all companies within a particular sectors behave in the same way. We can take an example from the recent export duty hike made by the government towards the steel industries. Currently, India exports steel to countries like Korea, China or Japan. Now, if government increases that export duty, the steel price in the international market is going to be costly. So these countries will not buy steel from us. Now what will happen? The steel companies will have to sell steel to our domestic companies. Now as soon as that news broke out, how the market reacted? All the companies within the steel sector fell down. Tata Steel, NMDC, JSW Steel, Vedanta, all those stock fell down to 10% within 30 minutes since the market opened. In Bengali, there is one proverb called Karur Poush Mas to Karur Sarbonash. What does it mean in English? That is, someone's loss is someone else's gain. So the steel industries who are not going to export steel anymore, they have to concentrate on domestic players. For example, who are the domestic players which need steel? Real estate industries, automobile industries. These companies require steel as their input. Now the loss of Tata Steel gets compensated by the gain of Tata Motors. So within the Tata group, there is neutral effect, but individually Tata Steel lose, Tata Steel's share fall down, but for Tata Motors it was very beneficial because they don't have to import steel from outside, they can purchase steel from the domestic steel industries. Hence, a threat to Tata Steel was actually an opportunity to Tata Motors. Now in stock analysis or company analysis, we need to perform both fundamental analysis and technical analysis. In today's video, I am going to talk about only fundamental analysis. And once analysis is done, we go for the Muhurat, that is when to enter and when to exit. Now let's go to the system and we are going to do a live demo of how to pick stock, what are the criteria. Like in my previous video, I told you how to pick an IPO. So how to pick a quality stock, what are the identification, what are the indicators that we need to follow, we are going to check from a live video next. So friends, today we'll learn how to pick stock via a live demo. Now if you follow the criteria that I am going to talk to you, then you don't have to depend on your friend's tip. So you don't have to ask your friend that, hey, give us a stock tip so that I can buy those stocks. Now after watching this video, you can pick your own stock with conviction. That is, you know why are you picking this stock, what are the benefits, what are the strength and weakness of this stock. For stock picking, I use Ticker Tape. Go to Ticker Tape home screen. I'll provide the link of this website in my description below. So click on Ticker Tape and click on Stock Screener here. Now in Stock Screener, as I told you that there are multiple sectors. So remember I told you that necessity, comfort, luxury. In comfort sector, there is one sector I talked about is finance or banking. So let's pick a banking sector. So the banking sector falls under financials. So I'm going to pick two popular sectors like private banks and public banks. Next, what will you do? We'll collapse this node. Then we'll scroll down and we'll select the large cap. Now what is a large cap? Large cap means, according to Securities Exchange Board of India, the top 100 companies in India based on market capitalization are called large cap, and from 101 to 250th companies, these are called mid cap, and any company which are having market capitalization less than, which ranks beyond 250, those are called small cap. We are going to pick up large cap in today's demo. And next, let's pick up the P ratio. What is P ratio? I'll talk about P ratio right away. So let's pick up a medium P ratio, that is which ranges between 40 to 45. Applying this filter, we are left with three banks, HDFC Bank, ICICI and Kotak Mahindra Bank. Let's pick up HDFC Bank. Now click on this expand arrow. So this is the screen for HDFC Bank. Now what do we need to check? First thing you need to check is P ratio. Compare the P ratio with the sector P ratio. Now what is P ratio? P ratio stands for price earning ratio. Now what is a P ratio? P ratio is the ratio of market price and the earning of that company. For example, P ratio is the ratio of price by earning. Suppose there are two companies, company A and company B. Both of the companies are being traded in the market at rupees 100. Now the first company, the profit of the first company is say 20 rupees and profit of the second company is say 50 rupees. Now which company is more profitable? Obviously the second company. Now if we check the P ratio, the P ratio will be equal to this divided by this. So P ratio of the first company is 5 and the P ratio of the second company is 2. So whenever the P ratio is lower, always go for those companies. So P ratio is lower the better. So in our example, HDFC P ratio is slightly higher than the market P ratio. The sector means the average P ratio of all the banks which are operating in this particular sector. So it is slightly higher than the sector P ratio, which is a red signal. We can go and check what is the forecast for this stock. For example, for this stock there is a 95% forecast. If I go to the detailed forecast, we can see currently the stock is trading at almost 1400. Now as per expectation, the bullish people, they are saying that it is going to be for the month of May 2023, it is going to hit 2100, and who are pessimists, they are saying that it is going to hit 1545, that is almost 11% rise. The average of this bullish rating and bearish rating is 38. Now come back to overview section. Next, what do you need to check? Next we will go for the finance. This is a fundamental analysis. Click on the financial statements. There are three types of financial statement: income statement, balance sheet and cash flow. Okay, income statement determines what are the profit of those company. So scroll down and first click on normal view. Under normal view, you can see there are three green signals. Number one, it says a revenue growth, that is growth in sales in HDFC. It is almost 16% compared to the average of this sector, which is 13%. So it is a green signal. Next, we can see over the last 5 years, the market share of HDFC has increased from 22% to almost 25%. So this is also a green signal. Next, we see the net income. What is the net income? That is the net profit. The net profit in banking sector is 11.5, while HDFC alone is earning almost 20%. So this is also green signal. You can see the numerics here. The net income is increasing 22,000 crore, then 27,000 crore, then 31,000 crore, and currently it is 38,000 crore. This is also a green signal. Next, select the drop down and go to margin view. In margin view, you can see the net profit margin. The net profit margin in this industry is almost 10%, but HDFC alone is earning 19%. So it is again a green signal. Now EBITDA margin, what is EBITDA? EBITDA, the full form of EBITDA is earning before interest, taxes, depreciation and amortization. So I am not going to go into too technical in this video. Just understand EBITDA is a profit, a part of profit. So EBITDA margin for other company, for the industry, the EBITDA margin is 16%, but for HDFC it is 28%. So this is also green signal. Now here you can see the net income is rising, net income as a percentage of total revenue. So if the revenue is 100, the net income is 18. Okay, again it is increasing to 18.53, then 20, then 22.6, 22.69. So it is also increasing and it's a green signal. Next, what do you need to check? Go back to your overview screen. You can see their peers. So for all peer there is a buying recommendation. For HDFC the buying recommendation is 92%. Let's see what are their peers. For ICICI Bank the buying recommendation is 90, almost 98%. So this is also very good. So this recommendation you can use. So whenever you see a buying recommendation, click on the detailed forecast and see how many analysts has given this opinion to buy. So here almost 40 analysts have given this their opinion to buy this stock. So 92% of 40 is roughly around 36. So 36 analysts out of 39 analysts are recommending buy for this company. So this is also green signal. Next, what will we check? Okay, sorry, in financial statement I forgot something. So let's go to the financial statement. So we check the income statement. Now next is balance sheet. Now in balance sheet you have to check current ratio. For other company, for other in bank we don't get the debt equity ratio. We'll talk about debt equity ratio with some another sector. In banks there is no debt equity ratio because banks are, the main activity of bank is borrowing and lending. So obviously the debt equity ratio of banks are very high. That's why it is not mentioned. I'm going to check another stock and I'll explain the concept of debt equity ratio. So next we'll check the current ratio, but current ratio says a red flag. That means where the current ratio of this industry is 11.74, but for HDFC it is almost 10. So although it's very marginal, very close to the industry average, but still it's less. That means it's a red signal. Next we'll check the cash flow. For cash flow we can see that the free cash flow was 16,000, but in the last 2 years it was negative. So there were cash outflows 64,492 crores and 18,000 crores, but currently again it become positive. So you see there is a huge jump. So minus for 18,000 to 40,000. So that means there is a jump of around 58,000 from last financial year to this financial year. So this is also a green signal. Next, go to overview section. Next you need to check this holding pattern. So in last 6 months there has been no change in the promoters holding. So that means, so it's neither a green signal or a red signal. That means the promoter mostly had their stakes within HDFC at a constant level. Now next one is low pledged promoter holdings. That means the promoter is not pledging their shares, so they are not taking loan by mortgaging their shares. This is a green signal. Again, mutual funds are increasing their holdings in HDFC Bank. So for mutual funds, HDFC Bank is a very attractive stocks. That's why they are increasing their stakes. Next, what you can see, we can go through the recent news about this company. You can click on all news to check all the relevant news. In left hand side, you can see a summary. Okay, so intrinsic value. So it says that the price of the share is more. That means because the P ratio is more than the sector, so that is why it is red. Intrinsic value is red. Now it says that return on equity versus FD rate. So in my previous video, I always told you, always encouraged you to move from your traditional bank or post office savings into this stock market. So it says that this stock is able to generate more return than the FD rates. This stock is not generating that much dividend. So we saw a recent dividend of 15 rupees, but the industry, this banking sector, is generating more dividend than this one. Next, we see that it is a good time to consider. So as I told you that there was one point called Muhurat, when to enter and when to exit, when to buy. So for Muhurat, it is a good time to consider, because when a stock is at overbought zone, that means people are blindly buying that stock. So we ask the investors to avoid those kind of stocks, and then there is no red flag. Next, so this is how you can pick a stock. And also I missed out that debt equity ratio. Let me pick up any stock. So I see Maruti. So let me click on Maruti. So for Maruti, I can show you what is a debt equity ratio. So same way, so it has a good rating and all. Now scrolling down to the financial statement and going to the balance sheet, you see a debt equity ratio. So whenever you hover your cursor within a particular field, it will explain what it means. So debt equity ratio means if a company is having higher debt equity ratio, that means the company has taken loan, that company has borrowed more money compared to whatever it has as their own fund. So see, in the last 5 years, debt equity ratio of Maruti is less than 1%, while the average, the sector average, what are the players in the automobile sector? Like we have Hyundai, we have Tata Motors, we have Maruti. So out of all those, the average of this sector is coming as 110%, while the debt equity ratio of Maruti is pretty less. So leave your comments in the description section if I missed out any point, or if you considered any other point apart from the ones that I just showed you. So I'm going to wind up this video right here. If you love this video, like and subscribe to my channel. Thank you very much. We'll see you next time.